SV Prasad and Rohit Srivastava are here with us. SV, let me start off with you. The obvious question, Reliance Industries. Have analysts really got it wrong, or is it largely an accounting change, largely because of things you can't really guess how much inventory gains are going to be there, how much hedging gains are going to be there?
I would frankly tend to go along with the management, because the management has said that, look, my refining margins have improved, even the petchem business has done well. So I would much rather give the benefit of doubt to the management rather than questioning the numbers. Of course, a lot of the things have helped them clearly.
I'm saying, how did analysts get it wrong? This is the most tracked company, right? This has been tracked from the 80s. If anyone became an analyst, they probably started off by doing Reliance Industries. How did they get it wrong? Because the business is pretty transparent. You know what the businesses are. You know how the petchem margins do. You know what the distillates are. You know what happens. What are the products which come out? What the market size is. But still, analysts got it wrong.
See, sometimes I think this is not the first time the analysts have got the results wrong. I think it's happened in the past as well, both on the positive side as well as the negative side. I think one of the things which is difficult to predict is what is the weighted average cost of the oil. I mean, one of the points that was, I think, mentioned was the discount that they were able to negotiate on the purchase of oil. So I think some of these, while the business per se may be transparent in terms of refining margins, the product composition, etc., which you just mentioned, but there could be certain things which is difficult to really for an analyst to really estimate till the numbers are actually out. So that would be my take, because in any business, I mean, an analyst can do only up to a point. I mean, at the end of the day, there are limitations as to what the analyst can also do.
All right, Rohit, let me ask you. If I look at export volumes have gone up of petro products. They've gone up, and this one is for Rohit, they've gone up by about 15%. But if I look at the value, that's down by about 9.4% in terms of export volumes. Obviously, because prices are lower there. Refined products, prices are down. The revenue from refined products is down about 12%. It seems to me that if deregulation of petrol and diesel plays a major role now in Reliance numbers.
Well, I guess that would be a good thing if it is the case. Essentially, these are commodity companies. So when you study them, you try to look at commodity prices, and if you have free pricing, then you can actually make the most of it. So to some extent, that's probably what has played out. But like you said, it's always been difficult to really pinpoint Reliance numbers from time to time. But in general, if you see, compared to the commodity cycle itself, they've done pretty well because they've managed their margins pretty well. Otherwise, typically, you would expect commodity companies to get hit in a down cycle, which you see in the revenue numbers, which change with prices. But the bottom line has been managed pretty well.
My question to you is that if we look at the way in which pricing is done for petroleum and diesel in India, it is essentially done on the basis of, it's not really free pricing, right? It's done on the basis of import parity price. I mean, you work out an import parity, there's a countervailing duty, there's a marketing margin. The base price of the refinery gate is actually worked out by the government. It's not as if the market has determined what this price is going to be. So at some point, if it actually becomes free, then what happens to a company like Reliance?
Well, that's what I was trying to point out, that their ability to manage that has been pretty good. So you probably give them the benefit of doubt.
So you expect that perhaps everyone underestimates how nimble their refineries are, right? That how quickly they can actually move into.
That's what history has shown. If you look at over a period of time, they've proven it again and again.
Right. All right. What do you expect from HUL, SV?
Well, I think the general expectation is muted. That's what the general expectation of the market is, and I would tend to go along with the market as far as HUL is concerned. Whatever benefits of good monsoon, etc., I guess will be seen more in the later quarters. So I expect that the HUL results would be more in line with what the analysts are expecting, because there's nothing really, no surprise element, unlike in the case of Reliance. So you can't really obviously compare these two counters. So I would expect HUL results to be more or less along the lines of the analyst estimates.
But I'm seeing analyst estimates, there seems to be a wide range, not in terms of the consensus estimates are out there on your screen, but in terms of volume growth. I saw somewhere that the volume growth is expected to be between 3 to 4%. Somewhere it says volume growth is expected to be 6%. That's a major difference, right? Where would you lie within that range?
If I were to pick a number, I would put it between 4 and 5%, honestly.
Okay. All right. But that makes a big difference to that number. So we better tell our viewers that the range is pretty wide. The median or the consensus number is what you're seeing on your screen for HUL, which we expect about 85-20 odd in terms of sales on a consolidated basis, and the PAT number for HUL coming at about 1150 crore or so. So that's where you see 8518 and 1147. Pankaj has a few questions. Pankaj.
Right. Rohit, I wanted to ask you about Maruti and the correlation that it has with yen. So when it became from 120 to 150, everybody was increasingly concerned what will happen to margin. Any sort of analysis you've done what historically Maruti has done with yen? Now it is at 100, 101, and everybody seems to just forget about it.
No, I don't give so much weightage, to that alone, because I think macro factors in terms of growth play a more significant role. These do have near-term effects, so it is purely sentimental at that point of time. So I'm not sure how much weightage you really give to purely the currency move itself in looking at that.
Right. How would you look at LIC Housing Finance? Results came out on Friday during market hours. It had an uptick move. It's today also right now up about 1% or so.
Yeah, I think there is some more short-term upside, probably another 3 to 4% upside is possible. So we've been looking at the long side of that trade for the last couple of days. And so we do see that there should be some more short-term upside. I'm not sure that it'll be a big runaway, but like I said, 3 to 4% upside is definitely looking possible at this point.
Right. SV, any view on LIC? Decent set of numbers adjusting for the one-off?
No, certainly. I would also tend to agree that in the short term there is scope for a further uptick as far as LIC housing is concerned. And also, I think we should also keep in mind things like masala bonds, because HDFC has done, subscribed 4 times. So I would imagine LIC housing would be a great candidate next. And that would again mean an interest arbitrage opportunity, because these are rupee bonds. So I think in the short term, I would also tend to believe that there is an uptick as far as LIC housing is concerned. Before we go off air, sorry, I'm just going to digress quickly. The whole business.
I have one question about LIC housing as well, to SV, and that's when you look at the numbers, their employee cost has gone up by 115% year on year. I mean, it almost wants you to work there. But is that something one has to get used to, this kind of massive bonuses that they're working on?
Yeah, I mean, one also noticed it. I would frankly look for the next quarter before one really makes a comment on that. I mean, is it a one-off thing? Is it some kind of a settlement?
I interviewed the management. They're going to join us at 10:15. So, that's where you can get the answer. You don't need to wait for the next quarter.
Okay, thank you.
All right, SV was saying something, I interrupted him.
No problem. I was just going to say that, I was just digressing quickly, is that I'm at last glad that the government has said that they are going to sell all the shares that Suti is holding, because frankly, holding like an Axis Bank or L&T or ITC there's no justification. This is something I've been telling for quite some years now. The only thing which I would tend to disagree or with what one of the pink papers has carried today is, why should ITC only be sold to insurance companies? Why not make an open offer? Why not allow even a BAT to come and bid for it? Because at the end of the day, it's a bit ironical that insurance companies, which kind of protect us from the ill effects of smoking, are asked to hold an ITC stock. Anyway, that's for maybe another day. But I thought I've just mentioned that on the way out.
All right, I have a question for Rohit. And Rohit, this is not the Indian market, but I'm just trying to look at what is happening to the Dow. Now, I was reading somewhere that historically, whenever the Dow Jones Industrial and the Dow Jones Transport indices have actually diverged, you've actually seen a bear market come in or some sort of a crash take place. And that apparently has started happening right now. You are an expert on this. Have you seen something like that happen?
Yes, that's a good observation, and it is apparent at this moment. Essentially, we call that an intermarket divergence, and it happens at significant highs and lows. But then this has been happening for quite some time, because the Dow Transports actually peaked sometime more than a year back. And so exactly 1 year back, you had the NASDAQ. So when you're studying, intermarket divergences, you look at each of these indices. The NASDAQ actually made its all-time high a year ago. And at that point of time, the Dow was not confirming that high. And the transports actually peaked months ago and was falling at that point of time. So right now, while the Dow has hit a new record, neither the NASDAQ has been able to get there, and the transports is actually only at a 66% retracement of the fall it made last year. So there are clearly divergences between those indices. They can be indicative of a trend reversal. Does it become a long-term trend reversal is only you'd look at it after you've seen that divergence hold out for some time, because these are long-term trends, and you want to see that the the transports doesn't really catch up with the main index, but it's an observation that raises a red flag in terms of whether the new high that you're seeing in the Dow and S&P is essentially a false signal.
Is there something like that happening on the Bank Nifty and Nifty as well? Is there some sort of a divergence? I know that the Bank Nifty has actually caught up in the last few sessions.
The big divergence I'm watching out for in our own market essentially is not the Nifty to Bank Nifty, but actually the Nifty to the mid-cap indices.
Okay.
What you're seeing right now is the mid-cap indices are making an all-time high over the last couple of weeks, which is not being confirmed by the Nifty or the Bank Nifty. So we do have that kind of a divergence. We had it even a year back because the Nifty actually peaked in March of 2015 and the mid-cap indices continued to make new highs all the way till exactly a year back to July of 2015. So you had that intermarket divergence. And after that, for the next 6 months, the whole market was down.
Okay.
But what you need to see is that these divergences hold out. We have it right now. If you see a peak in the market with this divergence holding out, then it's a more bearish signal than if everything was at an all-time high.
All right, Rohit and SV, thank you so much for joining us. Any disclosures that you'd like to make before you leave?
I'm all right. Thank you.
All right. And Rohit?
Yeah, our fund is long LIC, which we were discussing earlier. So that's the disclosure.